please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A lot of stocks have done well this year. One among them, of course, is Manappuram, which has doubled, in fact, and has been buzzing of late on news of promoter buying stake in open market. There's also been some buzz of an M&A deal. VP Nandakumar, MD and CEO of Manappuram General Finance, now joins us. Okay, we'll have him in a minute, but before that, just a word on how the market is shaping up. Advanced decline is looking good once again, about 1.5:1, 3:2. So that part is looking good. And in terms of individual stocks, Reliance Communication is once again running up. That stock up about close to 5%. And of course, we've been talking about Jindal Steel and Power. That stock is up 2.5%, and SAIL as well, which is up about 2.2%. And Cummins India is up about 3% right now. Okay, we have Mr. Nandakumar with us. Mr. Nandakumar, good morning. Season's greetings. So, obviously, there's a bit of a dichotomy here. This on one hand, you're buying some stock from the open market, and there's been some report that promoters are looking to sell. Are you in the market to sell your stake? Is that sort of report right, or do you want to clarify that promoters are absolutely not looking at selling the company?
Yeah, only the first part of the statement is right. That is, promoters are buying stock. And the second part is absolutely wrong. There had not been any discussion. This is all false rumors in the market.
Okay, so this stock that IDFC Bank, that you and IDFC Bank are probably close to a strategic sale deal, or even Edelweiss, all these names were floated as people who are looking for a strategic stake in your company. Is that right, that you all had talks, but they weren't fruitful?
Yeah, maybe, but yeah, we had no discussions, and I have no intention to part with the stake also. So from my side, it is these are I totally deny that.
Mm-hmm. Okay, but you had discussions, you're saying?
No, never.
No, okay.
Okay, that clarification is important. Mr. Nandakumar, currently the promoter stake stands at about 28.4%. How much do you plan to?
No, it is around 34%, more than 34%. Okay. Myself hold around nearly 29. Balance around balance is held by my wife. Mm-hmm. Both we hold more than 34%.
So do you plan to up the stake further?
Yeah, maybe. Whenever we have the liquidity, we may buy.
Okay. Any reason why you're aggressively buying stake in the open market?
No, I have confidence in my company, and also the prospects of the company, future of the company, business in the company. That's right. That's all. Only reason.
Okay. Mr. Nandakumar, there have been other instances of companies like, for instance, Bharat Financial, getting bought by IndusInd. It has benefited, it looks like it will benefit both sides. There could be a positive expansion for Manappuram if it was a part of groups like, say, IDFC or Edelweiss or other companies. You aren't even thinking or contemplating in the future some kind of a deal with these kinds of groups?
See, the niche players have the capacity to do business in a better way. Okay. And so that is the reason why Bharat Financial Inclusion is being acquired by a bank. Mm. Similarly, Manappuram is a niche player in gold loan industry. So some of the banks, etc., may have some interest, but there had not been any discussion so far. Okay. As on day, I have no intention to merge or do such a deal.
Okay. Well, fair point. The gold book declined in the last quarter. Has it come back now in Q3?
Yeah, it is coming back, and I expect around 5 to 8% growth during the second half of the year in gold loan book.
Okay. And what about the the asset quality? I mean, it's largely remained under control, but what do the trends look like for the new year?
Yeah, that it is the gold loan. There is no NPA. In fact, whatever is shown as 1% NPA is only a technical NPA, which will be cleared during the proceeding quarter. But yeah, in microfinance, we had a loss, but everything is contained. Mostly these are contained during the last quarter of last year. And also the first half of this year. So the coming 2 quarters will be better. So it is improving. The other businesses like commercial vehicles and the home finance, etc., which are done through subsidiaries or from our own books, there is no problem with the asset quality. It is as per the market.
But you're saying that this quarter, Q3, your AUM has grown. Because in Q2, there was a decline of about 5%. I mean, loan growth declined. It's Q3, you will report a growth?
Yeah, we will be reporting growth.
Okay. All right, we'll leave it at that. Thank you very much for joining us with all those details, Mr. Nandakumar.
It's flat for the equity market, so let's find out what's brewing in the commodity space this morning. Manisha Gupta joins in with a quick roundup of all the action there. Manisha, how is the last trading week of the year turning out for the commodity space?
Well, for some of them, it really is on the bullish side. For example, the crude oil prices continue to do quite well. We are holding around that $65 mark in the global markets, and that clearly has been supportive for the Indian markets as well. And it continues to be about the data, events, statements that you continue to hear from many of those oil producers on how the rebalancing can happen. Well, they really have been putting out first quarter, second quarter, or the max by third quarter is when everybody agrees that you will see the markets actually rebalance. Some of them also are predicting a deficit actually going forward in the crude oil space, and that clearly has been supportive. So 44% of gains in the last year, 15% up this year, and you have those projections of 10 to 15% for 2018 as well is how we are getting into the next year. On your screens, it's nearly 0.5% of a gain is what we have seen continuing for that space. The gold and silver prices also have come back with a bang. This month's low has been $1,237. Today we are trading at $1,277. So a good $40 of a jump up is what December seems to be closing with. The Indian markets have been gaining every day of last week, and we have started this week as well on a positive note. So that really is a 2-week highs that you are seeing on your screen for gold and silver, both those prices. The base metal space really has been quite divided. We saw good gains in the previous week. Doesn't seem to be holding around that. But as you can see, the volumes are thinning. The LME markets are shut today. Not much is happening in Asia in sense of volumes. While the ferrous metals like the steel and iron ore are doing quite well, the non-ferrous space seems to be getting into a bit of a profit taking. Keeping out lead, as we have been telling you, that is trading at a multi-year high as the battery demand in winters is expected positive, and that has been supportive for that. Trading strategies, we have them from Angel, and they have a couple of buy calls for the day today. For the gold prices, they're looking at upsides of 28,900. They also have a buy call in case of copper, where 465 rupees per kg is their target for today.
Okay. Thank you very much, Manisha, for that roundup. Let's move to, well, money markets and their impact on stocks, actually. The 10-year bond yield has now spiked to 7.3% this morning, at the moment standing at 7.299. Well, there would be an impact, obviously, on the borrowing cost for NBFCs. We are inviting a veteran from that space. Sanjay Gupta, the Managing Director of PNB Housing Finance, has joined us now. Good morning, Mr. Gupta. Thanks much. Well, does your cost of finance go up because of this rise in bond yields? Will you be able to pass it on to your borrowers?
Well, one is that Lata, the cost of borrowing is seeing a headwind right away. So it will take some time to really, make a difference in our total basket of borrowings.
Of course.
But not immediately, but if it continues, yes, then it will be. And when it comes to passing it on to our customers, then about 82% of the portfolio is on variable interest rates. So we can pass it on. But the beauty is that, the exact borrowing cost enhancement in a basket will have not that much impact on our individual customers.
Okay. Could you drill it down to some detail, Mr. Gupta? On an average, how much do you expect will the borrowing cost will rise for the second half of this year vis-a-vis the first half?
Well, I'm expecting on the total borrowings, it will have an impact between 12 to 15 bips. Okay. And because all borrowings are not bond-based borrowings, there are different lines of credit,
sure.
Including FCTLs, ECBs, NCDs, our retail deposits, etc., CPs and all.
Okay.
So 100% of the borrowing is not going to see that sort of a headwind.
Fair.
Okay. Mr. Gupta, good morning. Since we are heading into a new year, can you tell us a little bit about how the business is looking? Because, you know, give and take everything, the home loan to GDP ratio of India is much less than other countries like China, etc. India stands at just 9%. So the market is relatively underpenetrated. I want to understand from you, in Tier 2 and Tier 3 cities, what kind of loan growth do you hope to see over the next 1 to 2 years?
Well, these are the engines of growth, and we are seeing Tier 2, Tier 3 cities really looking up, and people are investing in their new homes. And these are basically home buyers who are actual home users. So we are expecting that that will sustain for some years to come. And we are also building our capacities to match that demand. Okay. And things are looking all right. Things are not too bad.
Okay, Mr. Gupta, you know, you're growing your AUM at a frenetic pace. Now, just a bit of worries that this kind of growth normally sparks. 30% of your book, we understand, is non-home loan book or non-individual home loans. Of that, 56% is loan against property. Is that, an area that one should worry about in terms of, say, NPAs or possible defaults?
Okay, let me first put, a little bit of facts correctly. 80% of our portfolio is retail portfolio, out of which 60% is pure home loans. Another 16% is LAP, or loan against property. Okay. And the remainder, 20%, about 12% is construction finance only for residential units. And the remaining 8% is equally divided between lease rental discounting, LRDs, and corporate term loans. And we are not seeing stress in any of the pockets particularly. Okay. So, our portfolio is performing pretty all right.
Even the construction finance?
Even, construction finance, in fact, is behaving pretty good. In fact, don't like to go on records, but the fact is that the choice of the developers and the choice of the projects are making a lot of difference. We are seeing sales velocities, we are seeing good collection efficiencies, and there's nothing to worry on the construction finance.
Just one number, you think that you will be able to maintain this pace of growth of your AUM?
Well, I really wish we can, and the markets are looking fine. The industry or the sector is responding very well to our capacity building. This particular year, 17-18, we are doubling our capacities. So I think it will stand us in good stead for the years to come by.
Okay. All right, we'll leave it at that, sir. Thank you very much for joining us. I think it was a 35% rise in AUM that PNB reported in the last quarter. So that is a fierce pace. But if it is coming with quality, I guess there isn't much to worry.